Good morning, and welcome to this month's edition of Oak Hill Regional Community Development Corporation's third Wednesday Parent Resource Chat. My name is Bettina Campbell. I am the Social Service Coordinator, and I'm also a Medicaid CHIP Assister for the Oak Hill Regional Development Corporation, which is the parent company for Healthy Kids Mississippi. I'll be your moderator for today. We also have with us this morning Lottie Miner, who serves as the project director for Oak Hill, and also Thomas Duke Robinson, our technology metrics coordinator. We want to recognize our board chair, Jennifer Garrett, and our executive director, Dr. Michael O. Miner. In addition to this Zoomcast, we are restreaming today webinar on Oak Hill Regional Community Development Company Center and Healthy Kids Mississippi Facebook page. Feel free to share your social media pages. And excuse me, I just a little bit of rattle. I just got some upsetting news. So I apologize if I'm sounding disjointed. Today, we're going to be talking about financial literacy. And I'm sure that is something that we can all get a better understanding of. I know myself, when I was growing up, my parents never talked about it. And as being married at an early age, my husband and I never talked about it. It's something that we learned as we went along. And what we're defining as financial literacy is the ability to understand how money works in the world, how we manage it or earn it, and how we invest it, how we donate to others. And I've been fortunate enough to have two ladies who fully understand this concept. And today, so we have with us Ms. Hanitha Rich, who is currently serves in the mortgage department at the mortgage loan originator with Community Bank, and Ms. Elaine Toney, who also works for the Community Bank. So get out your pads and pencils and prepare to take lots of helpful notes. We're also sure to save time to answer your questions at the end of the presentation. So let me share with you just a little bit more about Ms. Hanitha and Ms. Toney. Thank you both so very much for being with us today. And we're really excited and we honor your knowledge. And Ms. Richards has served, she's as a mortgage loan originator with Community Bank. She's a native of Camden, Mississippi, and an alumni of Belhaven University, where she earned a master's in business. For over 20 years, she has served the Mississippi communities by providing financial literacy, home buying education, and she has assisted countless Mississippians in realizing their American dream of owning a home. She has a strong desire to help others achieve their goal in building wealth and realizing financial freedom. Therefore, whether you are a first-time home buyer or a second home owner, this is purchasing, building, or refinancing, she is ready to put her experience to work for you. Sounds like she's got a lot of knowledge, and I'm sure that she's going to be able to answer those questions that you have. And her wonderful co-presenter today, Ms. Elaine Toney. Am I pronouncing your name correctly, Ms. Toney?
It's Toney.
Okay, I just wanted to make sure I was pronouncing it correctly. Ms. Toney has been at Community Bank for 12 years. But while she's only been there for 12 years, she has over 37 years in mortgage origination and 37 years in banking industry and 33 years in mortgage origination. She is an alumni of the University of Southern Mississippi with a passion for helping people purchase homes of their own. She enjoys teaching financial literacy and as a part of the banking outreach program. She often tells clients, I don't just want you to own a home, I want to help you know how to keep that home and to learn how to keep as much of your own money in your own pocket. She resides in Jackson, Mississippi with her husband of 35 years, and she has 2 children. So again, welcome this morning. And I am so excited to have you. And so I'm going to, at this point, I'm going to turn it over to you and say, let's go.
Thank you so much. We're going to, okay, you all can hear me then.
Yeah.
Hanithia, are you going to do any introduction or do you want to just go ahead and get started?
No, you can jump right in. I think Ms. Campbell did an awesome job with introducing us. Thank you so much. We are excited to be here and participating in this particular call, a Zoom meeting. So Elaine, you can jump right into the PowerPoint presentation and we can move forward.
Okay. All right. On the PowerPoint, we're going to get started with reasons to keep your money in the bank. Okay. What are some of the reasons that we keep our money in the bank? Number one is for safety. Because when it comes down to it, we do have a lot of customers who tell us that they keep their money at home because they don't trust the banks. Okay. That they feel that keeping it at home will allow them to save better. What Hanithia and I usually say in our classes is that, first of all, you do have to learn how to trust that when you put your money in the bank, especially if you put it in a bank such as Community Bank, it is federally insured. What that means is that if anything happens, any kind of tragedy or whatever happens, your money is insured and you will get your money back. But if you elect to keep your money at home, under the mattress, in the freezer, some of the other places that people keep their money, anything can happen to that money. And once something happens to that money is gone. It's gone and you will not get it back. Even if you have homeowners insurance, I think that the homeowners insurance will only insure your money up to $200, maybe $250. God forbid if you have a fire, if you have a fire, it's gone. It's gone and there is no recouping it. Plus, when it comes down to finances, if you think about it, if you expect your money to grow and you become more and more, you're saving and your saving is accumulating, there's only a certain amount of money you can keep at home. And if you are going to have the best use of your money, it needs to be in a bank where you have instant access to it, where you're earning interest. You know, even though the interest rates are low right now, still some interest is better than nothing. And just the convenience of not having to look over your back and watching who's coming in and out of your house more closely. Just afraid that somebody's gonna know what you're doing and bop you on your head, just to be honest, and take your money from you. It'll alleviate some of that fear. But the convenience itself is just, you're if you're ever gonna get rich, and some of us might, how are you gonna keep all of that at home? It's just not happening. And then, as I say, the security of that, and if the cost of the risk is just not worth it. And so if you don't have a relationship with a traditional bank, we encourage you to do that. Put your money into the savings account, set up an automatic draft so that when money is coming from your payroll and go directly into your savings account, that helps and encourages you to save. So, not saying that you can't have some money at home. I mean, you know, you have small emergencies that you might want cash for, but the bulk of your savings should be in a traditional bank. Okay. Next slide. Is it on the next slide? I can't see it. Okay. All right. So again, your traditional banks and thrifts are federally insured. And once you have your money into a bank, that's when you start developing a relationship with the bank. That's because at some point in time, again, unless you just got a whole bunch of money, at some point you may want to buy a car, you may want to buy a house, or you may want to buy help pay your child's tuition, just a whole bunch of things that you may want to do. So at some point you may need a loan. So if you have a relationship with the bank, then you have people that you know, the loan officers. When you come into the bank, you get to know them. You may at some point have a check from somebody else that you want to cash. So if you have a relationship with the bank, it's easier for you to conduct business. Get ready to go in there and get your car loan or your whatever the case may be. Developing a relationship with a bank is very, very important. A credit union. Of course, I'm a banker, so I put that bank up there first. But there's nothing to say that you can't have multiple bank accounts and multiple relationships. Say with the credit union. A credit union is, the difference is that you own part of that credit union. But either way, have some kind of relationship with some traditional financial institution. Next slide. Okay, so say for instance that if you did not have a bank account, and as far as the cost is concerned, anytime you get a check from somebody, if you don't have a traditional bank, then you have to pay to get that check cashed. And over time, the cost of paying to get checks, to paying to get money orders, paying to get certified funds, it can add up. It can add up, and you may think, oh, well, it's just, a couple of dollars this time, a couple of dollars that time. But if you do the math and you keep up with it, you'll see that over time, paying for check cashing and money orders services versus having your own bank account that you can go in and you write checks when you need to. Not everybody writes checks all the time, but there comes a time when you want to write a traditional check. And I like to say, you write it when you feel like you want to prove, you may have to prove that you made that payment. Like when you're getting ready to pay your rent. There's nothing like having a cleared, back in the day, my day, we used to call it a canceled check. Now they call it a cleared check. There's nothing like having a cleared check to prove that you paid something. You give people cash, that's at the end of the day is your word against theirs. But if you give somebody a check and let that check clear your account, then you've got a record forever. Because even if you don't keep up with the check, then your bank is going to keep up with that check. So it's less expensive for you to have a checking account than not have one. Next slide, please. When you bank with a traditional bank, you've got 24 hours, 7 days a week access to your account. You can pay bills, transfer money, all of that you can do all of that online banking. You don't have to worry about your cash being stolen or lost. And it's just good record keeping. And it shows stability, believe it or not. Having a checking and a savings account, it shows stability in your finances. Next slide. Okay, let's go on and go through that one. Go to next slide, please. And we're going to go through that one as well, because we've already talked about that there is cost to when you don't have a checking account and you're having to pay for different fees, okay? But when you have a traditional checking account, it allows you to monitor your spending, and when you monitoring your spending, when you're keeping up with what bills you have to pay, when you're keeping up with what your expenses are from month to month to month, you can go back and if you need to go back and see, well, what was I spending on cable then, or what was I spending on how much did my groceries cost me then? If you're using your checking account like it's supposed to be, and you're monitoring that kind of stuff, then you have a track record. And once you have a track record, then you know how to adjust. You can adjust your expenditures and everything for the future. And if you wanted to put yourself on what I call a debt diet, then you can go back, know what your expenditures are and have been, and know that what you can adjust them in order to meet certain goals that you've set for yourself. But it's just, it's not enough to just have a checking account. You have to learn how to correctly use it to where it's beneficial to you. Okay, it gives you a better ability to be able to stick to a savings plan and to a spending plan and save money. It helps you to build a positive relationship with your bank for your future transactions, and we've already talked about that. When you get ready to do a short-term loan, If you've got a relationship with that banker, it's easier for you to do that. And of course, it is the best record keeping that you have for paying your bills on time. Next slide. Okay, and then if you're federally insured, it limits your risk to where you don't have to worry about your money being taken from you. Next slide. Next slide. Okay, setting financial goals. When you get ready to get down and dirty and serious about your finances, then the best way to do that is to set financial goals. When my husband and I first got married, he told me, he said, we're going to have a family meeting. I'm thinking, well, family meeting is just the two of us. But we sat down at the dinner table. I didn't, I thought I knew him, and I guess he thought he knew me, but we didn't know a whole lot about each other's finances. So we sat down and as a couple, went over our income, went over our finances, went over our debts, went over our expectations on what we wanted to accomplish and where we wanted to be a year from now, 5 years from now, 10 years from now. And that may sound like, oh, wow, that sounds kind of clinical or calculated. But to be honest with you, sometimes that's what it takes. If you are not on the same page, if you're not on the same page with your partner, how are you ever going to work together to accomplish your goals? Because you don't know what your goals are if you're not talking. So the only thing, the thing that I would tell you is, whoever it is, everybody in your family, I like to say, get at this point, and it's never too late. It's never too late. Whoever your partner is, if you've got kids old enough to understand what a dollar is, they need to be in on your family discussions. When I was a little girl, my mama and daddy never talked about finances to me. Never talked about finances. I didn't know what kind of money they made. I didn't know anything like that. And I feel like, had I known what I know now at an earlier age, I would have benefited from that. So my husband and I decided that we weren't going to make that mistake. When our children was old enough to hold out their hands asking for money, we started explaining to them then what all it took to make the money and what all it took to run our household. And we started early trying to educate them on finances. So the way I look at it is, everybody involved in your house, everybody who lives in your household needs to be involved in your financial goals. Because if everybody is working toward the same goal, you're more likely to be able to accomplish that. And you don't want to handicap your kids to where they get out there on their own and they're floundering. Don't know anything about finances and credit and budgeting and savings. So the younger, it's just like anything else. The younger they are, when you start talking to them, then the better they're going to be. And just think about it. If they're financially stable, then you don't have to help them out. That helps you out, right? So start with your partner, identify and write down your goals. Sometimes just seeing stuff in black and white, helps and makes a difference. Organize your goals. Educate yourself. Read anything that you can find. We've got these smartphones that we have in our hands all the time. Let's use them for good sometimes. Anything you want to know about anything is usually accessible to you. And then once you do that, you can't just, coast. You've got to evaluate your progress. Sometimes you may have to do what the football player says, back up and punt. You may have to adjust your goals or adjust your finances, but you'll know that if you're keeping up with it. And Miss Benita, I'm kind of like a Baptist preacher. If you need to pull my coattail, please do so. Okay.
No, you're fine, Elaine. You got take another 5 minutes or so and cover those topics.
Okay. All right. But do it as a family unit, and the more you do it, then the more comfortable everybody is going to be. And the more they understand and more comfortable they are, the more likely you are to reach your goals. Next slide. Okay, why create a spending plan? Of course, that gives you a step-by-step plan for meeting your expenses in a certain given period of time. Because when you're setting financial goals, you do have to put a time limit on it. Because if you don't put a time limit on it, then you're floundering. And how do you ever gonna know if you've reached your goal if you don't put a time limit on it? When you're talking about finances and you've got a plan in action and you see your plan is going the way you want it to be, that helps to reduce anxiety. And I'm here to testify that once I started saving and had what I call my my safety, my nest egg, it does reduce anxiety. There is no way that everybody can plan for everything. You try to do your best, but the more financially stable you are, I promise you, and you know that there are some things you just simply don't worry about. And the more savings that you have set aside, then and the less anxiety, I mean, it's got to be good for your health, right? If you're not stressing as much, surely that's good for your blood pressure. But it does reduce anxiety to know that you've got a plan in action. It gives you a sense of control. And of course, when you got a spending plan and you're following it, it's going to help you build your assets. Next slide. A daily tracker. Do you know where your money goes each month? I cannot tell you how many customers I have come in and who make good money. They make very good money, but they have none. And they don't know why they don't have any. They've just figured that, well, I don't make enough money. Well, oftentimes and more often than not, it's not necessarily how much money you make, is what you do with it. I mean, we watched the Super Bowl this weekend. Statistically, 78% of those guys out there playing ball who's making millions and millions of dollars will retire broke. Not that they didn't make the money, but if they don't know how to manage it and don't know where that money is going, people have a way of separating you from your money. From on all kinds of different levels. If it ain't nothing but you're eating out every day, eating out every meal, if you don't know where your money is going, it's going to get away from you. So oftentimes we suggest our clients to do what I call get on a debt diet. you have to track where your money is going. And if that means, for me, the old-fashioned way of tracking is to write it down. I mean, you know, I'm not ashamed of it. I'm old-fashioned. I use an old-fashioned book and paper, writing down my expenses, tracking them, knowing where it's going. Because if you don't know where the leak is in your boat, then you don't know how to plug it. And if you don't plug it, you will sink. So I would suggest that if you don't want to do it the old-fashioned way, get yourself an app. There's so many financial apps out there that offer you ways to track your spending, and you can put, if you really know what you're doing, which I don't. my children tell me different things, but there are ways that can give you alerts and alarms if you've gone over your preset goals. But whichever method you use, have a method of tracking your daily spending. Next slide. Okay. Of course, in order to track spending and have a budget, you have to know what your income is coming from. I mean, that sounds kind of basic, but there it is. Whether you get Social Security, whether you get W-2 wages, child support, or whatever it is, know where your income is coming from and what your expenses are. Next slide. Next slide. Okay, your expenses. Again, if this sounds basic, do understand that your average person does not do this. They don't know. You would think, well, when the rent's due, when the electric bill is due, the phone bill is due, but a lot of people don't pay attention to that. That's why a lot of them get in trouble when they say, well, the reason that my bill was not paid on time is I get paid on the wrong time of the month. Well, you get paid when you get paid, and it is what it is. And your job is to put those together and make it work for you. If you have to, that your expenses are coming up, sit down and write your budget out and make it work. You have to be on top of it. You have to be aware of when everything is due and when everything needs to be paid. I think this is my time. So I'm going to yield the floor.
Okay.
To Ms. Richard.
Okay, thank you, Elaine. We can move on to the next couple of slides. Okay, perfect. There it is, right there. So when we talk about budgeting and we talk about spending, and we talking about financial literacy, traditionally, one of the areas that we have overlooked has been our credit. And credit, in this instance, credit really, really matters, because credit is a direct tie to how much things cost for us and how much money we actually can spend and how much money we actually can save. So when we talk about credit, we're talking about the ability to borrow money. Okay, go ahead to the next slide. And so I want to talk to you a little bit about why 10 reasons having good credit is so important, okay? Because it affects, again, how much we pay for things. Number one, it affects buying a home. If you're ever to the point where, hey, I want to make any type of large purchases, then it's going to matter. Your credit is going to matter. Even when it comes to buying a car, when it comes to things like employment, sometimes, when we talk about our finances, when we have bad credit, our employment can be hindered because there are certain jobs that we are not going to be able to apply for, simply because of our credit. And one of those jobs, or any job in a financial industry or with a financial institution, they are going to consider your credit. So starting a business, things such as turning on utilities, whether or not you're going to have to make a down payment or a deposit. If your credit is not as good, then you're going to have to put down a deposit. Things like getting a cell phone, whether or not it's going to be more expensive for you to go and get a pay-as-you-go phone, or whether you can go to a cell phone company and actually get on a really good plan because you have great credit. All of this is going to tie back to your financial situation. So when we think about credit, we want you to be really, really conscious about how important credit is and why it matters so much. Okay, next slide. So when we talk about excellent credit versus bad credit or not good credit, um, when we talk about credit, it really, really is expensive having bad credit or having low credit scores. Okay, very expensive. And I pulled this scenario. It's an active live scenario. I pulled it in terms of buying a car. I have a son who works at a car dealership, and I called him just on yesterday and got some rates. I said, son, if you see someone come through with, they have not so good credit or bad credit, what are the rates that you're on average seeing? And he said 28.5%. 28.5%. Okay, that's when you see those ads that, oh, credit, it doesn't matter, you can ride today, don't worry about your credit. Okay, it's because it's going to cost you a lot more money when we're dealing with low credit scores. Okay, so I pulled this scenario: excellent credit. Let's say purchasing a car for $30,000 and you're going to pay it off in 5 years. Excellent credit, let's say you can go and you can get a 1.99% interest rate. Okay, and let's say not so good credit, again, that 28.5% interest rate. Look at the monthly note on that 1.99%, $442.38, versus the monthly note on that 28.50%, $873.72. Do you see how having not good credit really matters, and it affects your buying power? It affects your day-to-day spending, how much you have to spend for basic essential things like a house, like a car. Okay, so overall, that monthly difference is $431 a month. You can be driving the exact same car as your neighbor, but paying $400 and something more because of this simple thing that's called credit. Okay, so the difference over a 5-year period of time, $31,804. Okay, so let's say the person with excellent credit says, hey, I can afford to pay $873 a month. So I'm just going to pay $873 a month, and that difference, that $431, I'm just going to take it and put it in the savings account. Look at how much money that is within a 5-year period of time on savings. So you can see just how important credit really is. Next slide. Same thing with the cost of purchasing a home, whether you have 3.25% interest rate or whether you have 5.5, monthly difference of about $265. So just really wanted to highlight how important credit is and why it really, really matters. Next slide. So simply put, credit is convenient when you do not have cash. It's useful in times of emergencies, and it allows you to make purchases over a period of time. Okay, major purchases like a house, and things like that. So next slide. So, and the reason credit matters so much, and I'm going to tell you, when you're looking at making purchases or looking at coming into a financial institution and we pull credit, credit simply tells us a little bit about you. It tells us who you are. It tells us how much debt you have. It tells us whether you have made payments on time. It tells us whether there is any negative information about you in your public records. So when you come in, we consider all these type things, and then we will put a cost, which is your interest rate. So we'll put a cost associated with your credit report. So sometimes you hear people say, oh, well, you don't have, your credit is low, so we got to give you a higher interest rate to offset the risk. That's exactly what's happening. So that's why we want you to, again, be conscious of it. Let's work on getting our credit scores up so we can work on being in a better financial position. Okay. Next slide. So to help you understand credit a little bit more, there are credit reporting agencies. There are 3 major credit reporting agencies, bureaus, Equifax, Experian, and TransUnion. Okay, and on this particular slide, if you'll notice, we have website and telephone numbers. By law, each one of the credit bureaus are required, if you request, a free credit report. So that you can see what's reported on your credit report, and you can know what's going on with you, okay? A lot of times we're asked the question is, what's a great score? What's a low score, bad score? I've added to the slide here with Equifax, your credit scores can range anywhere from a 300 credit score all the way up to 850. And I'm going to tell you, nowadays, folks with the 850, they get to talk about and negotiate their interest rate. They get to say, oh, I have an 850 credit score. I don't want to pay 28% interest. Or they get to say, well, no, I'm not going to go to that place. I'm going to go to this different. I can shop somewhere else with my credit because I have excellent credit scores. Okay. Experience, it ranges anywhere from 340 to 820. And then there's another range on your TransUnion report, anywhere from 150 to 934. I wanted to show you guys the high end so we can start kind of looking at striving to get to the high end of the total poll versus being a minimum credit score or a low credit score. Next slide. Okay, I'm going to go ahead and slip over next slide. Okay, next slide. I'm going to skip over that a little bit. Okay, I do want to talk about on this particular slide what makes up a credit score. So I just kind of talked to you guys about that higher end credit score. How do we get there? I want you guys to understand that what makes up that credit score. How do they get this? What factors, what things are they considering? Number one, they're considering your payment history. Okay, how well you're making your payments on time. What's that history? So that's about 35% of your credit scores right there. So what happens if you're not making your payments on time? 35% is a huge percentage. Your scores are going to be low. So that's why we encourage you to make those payments on time. And then the amount of your outstanding debt weighs about 30%. Your credit report tell lenders whether or not you're overextended in debt. How much your capital, how much you have there in terms of debt. Okay, the length of your credit history. How long have you been having credit history and making payments on time to different lenders? And then there's your types of credit. Is about another 10%, whether it's installment loans, whether it's a revolving credit, what type of credit do you have? And then the new credit, you've heard people say, or you probably heard new credit 10%. That's if you go and you open up a new card or you get new credit, you'll notice about a 10% change there. So about a 10% increase. Next slide. So how long does negative information remain on your credit report? Okay. So negative information, about 7 years. Bankruptcies, I've read some data that say 7 years. So some data says 10 years. So 7 to 10 years, depending on what state you're in. Judgments, about 7 years. Student loans, 7 years, and then inquiries. Inquiries generally last or shows on your credit report for about 2 years. So, and generally the period runs from the date of your last transaction. So whatever that last transaction was to that date, that's when it starts. Next slide. So tips for improving your credit. And I know I'm moving kind of fast because I'm racing against time here, but some tips for improving your credit scores. Once you contact the credit bureau and you order your credit report, let's say you go on social, any of the Credit Karma or any of the sites, and you pull down your credit report, okay? One of the things you want to do is you want to review it and you want to make sure that the information that's reporting on you is correct. So if you find that there's any inaccurate information reporting, then you want to go ahead and contact the credit bureau and let them know that this information is not correct. And you can go to their website, call their telephone number, fax in information. It's a number of ways you can do that. Okay. Now, I will tell you this: if you see a debt that's on your credit report and you dispute that debt and you say, oh, this is not mine, you're going to need to have documentation to support that and back that up. So if it's a bill and you've paid that bill, you want to give a copy of where you paid that bill to the credit bureau. And within 30 days, they're going to investigate that. And if the information is inadequate, then they will remove it from your credit report. But if it's not inadequate, they'll take it off for it within that period of investigation, and then they'll add it back to your credit report and your scores or go down. So be careful with that. Paying your bills on time. Again, payment history, paying those bills on time, it matters. So whatever bills that are reporting to the credit bureau, make sure that you're paying those bills on time. Okay. And in some cases, you can have the lenders to review utility and other bills or self-report those bills to the credit bureau where you're making payment on time. Of course, you would have to show proof of that. Okay. And then keeping your debt levels low. Next slide. Okay. Another tip for if you find yourself, you said, oh, well, I want better scores, but right now my scores are down. Apply for a small bank loan. A lot of banks, especially here at Community Bank, we have a loan set up where you can do secure credit cards, where you can come in and open up a savings account and then get a credit card based off what's in your savings account. And then we also have other small dollar loans where you can take advantage of with flexible credit requirements, all with the efforts of helping you to build your credit score. So we offer things like community credit classes where you can come in and attend a class for 3 hours and then you can get a loan. If your credit score is 500 or less, you still can get a loan if it's, so if you need any additional information, contact a local community bank. Another way to improve your credit is you can ask a friend or relative to co-sign a loan for you. Okay. One of the best ways and fastest ways I've seen, with just my experience in getting your scores up, is being added as an authorized user. As an authorized user, you can actually get on someone's credit card where they're making their payments on time and they have a low balance, and it's kind of like you almost borrow their credit. It's kind of like if they had a credit card and they had it for 2 years or 3 years, they add you, it'll show up on your credit report showing that you have had a credit card for 2 years. Okay. And then make regular deposits into your savings account. How does this affect my credit? Okay. Well, it affects your credit because if emergencies happen and you've been kind of budgeting and savings, then you can go ahead and grab money out of that savings account and pay that bill on time. So it's very, very important for you to set something aside for emergency purposes. So And life happens to everybody. But if you have a set aside, then you can protect your credit because you can take that money and go ahead and make that payment. Okay. Next slide. So I've already kind of covered the cost of credit, and we had some really good slides up front to kind of show you how expensive credit can be when you do not have the credit that you need. Okay, when you have a lower score. So we've already covered that. Let's go ahead and go to the next slide. I do want to talk a little bit about this, and I'm gonna wrap it up. I do want to talk about payday loan services and short-term loan. Okay. Payday lending, sometimes when life happens, that's the first place you'll go and grab a payday loan. They are extremely expensive, extremely expensive. Okay. And here's the chart. If you borrow $200 for a 2-week period, you're going to end up paying a $30 fee on that within a 2 weeks period. So you're going to end up writing a check for about $230. That's 391% interest for 2 weeks. Okay. And then if you roll over or renew that, you're going to end up paying $260. Very expensive loan. Go to the next slide, please. Okay. Refi anticipation loans. Same exact case scenario. A short-term loan secured by your income tax refund. That's exactly what that is. So if you get a tax refund for $1,500, if you participate in that loan, they're going to charge you about $300. Yeah, sure, you'll get your refund within 24 hours, but think about it. It's been a very long time already and you don't have that refund. Can you wait another week, or can you wait another 3 to 5 days? Okay. To avoid doing that, you can say, hey, I want you to do my tax returns, but I want it directly deposited into my bank account. So you can still get it back pretty fast and you can save yourself that money. Okay. So you're get a check for about $1,200, but you just lost $300. Okay. So the lender, they'll keep that money. Next slide. Okay, again, this is just more of a breakdown for that. Your typical costs may include tax preparation fee, $100, refund anticipation fee, total fees $240. Okay, again, file your returns electronically, and right now they send up sites all over the state of Mississippi. That's called your VITA or your Vital sites, where you can actually go in and have your tax returns prepared for free. Next slide. When you need money fast, this is usually when we make some really not so good decisions, and we end up in some very, very bad predicaments. Okay, when your car breaks down. Again, that's why we stressed earlier about budgeting and spending plan and trying to save and set something aside. Next slide. Okay, you can go to the next slide. Predatory lending. Okay. We do want you to be aware of those. They're usually, again, places where you go check cashing places. I don't know if anybody's familiar with certain areas in the Jackson metro area, but we probably have in certain neighborhoods, we probably have over 20 payday lending loans out there, places for people to just go and get in debt, you know? So we're going to go ahead and wrap it up from there. Does anyone have any questions about anything that we've covered so far?
Doug, can you check and see if we have any questions on social media?
Alrighty. No, man, we do not have any questions from social media.
We've got a lot of good information. I just have just a couple of questions. It says, when I get paid, my money goes on a green dot card, and I just use my card to pay for everything. I can even get cash. Is this good? Ms. Ernest?
Okay, yeah, Elaine, were you about to answer that question? You can go ahead.
You're muted, Ms.
Yeah,
Elaine.
she's muted. You're muted.
Okay, can you hear me now?
Yes.
Okay. If you get paid on the Green Dot card, what you have to be careful, very careful with cards like that is to know for sure what kind of fees are being charged to you, because oftentimes there's a lot of hidden fees on there. In most cases, the Green Dot card is not something that you're looking at as if you were looking at a checking account. From what I've been told, I've never personally had one, but from what I've been told is that, like, if you make an inquiry, if you looking at checking your balance or anything like that, they charge you each time you do that. So if you are being charged to to have that card, be sure you know what you're being charged. I had a customer who did not realize that for the first, I think it was the first 3 months of the year, he had paid almost $200 in inquiry fees, because there's no easy way of checking those accounts. If you have any kind of way of getting a traditional checking account where this is right there in front of you, where you can see what's going on and not pay those little small hidden fees, then that's what I would do. But the main thing is to know what you're dealing with.
That's some very good information. So thank you. And one last question that I wanted to ask: what about student loans? Are they on our credit report?
Yes. Yes, student loans do report on your credit report, and a lot of times people have various mishaps with student loans. And they kind of think like, oh, I have student loans, so I can't make any type purchases and things like that. Well, that's not necessarily true. Student loans, if you find yourself in your student loans or not in deferment or they're reported negatively, we do encourage you to go ahead, contact student loan, get into some type of a repayment plan with them so it can start reporting back on your credit report. So they're on there. Don't ignore them. Use it for your advantage to keep your scores up. Just communicate with them, get on a good repayment plan, something that you can absolutely handle, and make those payments on time, because that will increase your credit scores by making on-time payments to student loans.
And can I interject right there?
We've had some. Yes.
Okay, and while we're on the subject of student loans, really quick, please be aware of excessive student loan debt. Make your kids or whoever is getting ready to go to school aware that all easy money ain't necessarily good money. And that once you get into that student loan debt, it will follow you for the rest of your life. And that student loan debt has a way of accumulating before you know it, because they will give you a student loan just by having a pulse. So it has a way of snowballing. Before you know it, you're 75, 75,000, 100,000, 150,000, $250,000 in debt with student loans, which can defer so many of your life goals, retirement, just financial security. So please, please, please be aware of that student loan debt and not let it get out of control.
Thank you so much. It's wonderful information that you shared. I think we all learn things that will help us to better understand how important it is to become actively engaged in being better stewards of our finances. So again, thank you so much. Just some quick reminders. The Oak Hill Regional Community Development Center's Super Tax Day is Saturday, this Saturday, February 19th, from 10 a.m. to 2 p.m., where you can drop off your taxes and get them done for free.
There you go.
If you have questions about that or you need more information, please call 662-298-3584. So see, you already have an opportunity to become a better steward on Super Tax Day. On February the 19th, that's this Saturday also, we have a Faith and HIV Summit that's coming up. It's from 10 until 12:30. So we invite you to join us on that. On February 28th, we invite you to join our Ask Pat and Mary webinar. And finally, on Saturday, March the 5th, we're having our 4th annual Women and Girls Health Awareness Conference. And oh, by the way, just because we say women and girls, it doesn't mean men are not welcome to participate. So we look forward to you in joining us in those events. If you have need for insurance, please, again, we are more than welcome to help you with that at the Hill. Please call us at 662-298-3584. Again, that's 662-298-3584. And finally, our next third Wednesday Parent Resource Chat will be March the 16th. So again, you may learn more about all of these things that I just shared with you at www.okhioregionalcdc.com. And once again, I want to take the time to acknowledge, there's another website, www.healthykidsms.org. That's www.healthykidsms.org. And once again, I want to acknowledge Jennifer Garrett as our executive director, Dr. Michael Miner. This has been a production of the Oak Hill Regional Community Development Corporation, where we're belonging, building, and bridging in the Mid-South region and across the state of Mississippi. So again, thank you for joining us. Have a good day.
Thank you.
Ladies, please stick around. We're going to be on Zoom. Are we off social media, Duke?